Hello and welcome to the Truth About MACD video series. I'm Jackie Ann Patterson, the editor of Backtesting Report. I have a whole lot of information to share with you about MACD, but first I wanted to tell you a little story about how I came to do all this research and how I've found out so much about the MACD in the first place. So I have been interested in trading for a long time. Along the way, I decided I wanted to learn about technical indicators because I wanted to have a more objective way to make decisions about when to buy and when to sell. So I was watching this webinar series with a trader and able to look over his shoulder as he went through charts and made trading decisions, and the MACD figured fairly prominently in that. So I thought, okay, I'd like to learn how to do this. So, it looks great when he's doing it. I'll do the same thing. Well, I looked at a couple charts, was a little confused, so I sat down. I actually brought up a tool where I could plot the price of a security, price of a stock, and MACD, and I could click through bar by bar. And each time I noted a signal on the MACD or the MACD histogram, and then I could watch and see what happened with price and click forward and do this sort of simulated trading in this way, simulated backtesting even. The result of that actually was confusion, because as I clicked through that, the price didn't always respond to the signals, and I was confused. I thought I didn't understand the MACD. I asked for help, and I was pointed to this video by Gerald Appel, who's the inventor of the MACD. So I watched that video and learned more about the MACD, and probably the biggest thing that I came away with was that the MACD had really done a good job of detecting the change in the stock market, the bottom in between 2002 and 2003 as the tech wreck ended and that long bull market began. I was still personally very gloomy and bearish, but here this indicator, the MACD, was giving bullish signals, and I thought, wow, this is really good. This is something that could be useful to me. So I really do want to learn more about it. So I studied the MACD, studied the signals, did more of the manual back testing, and I actually wrote some software that worked with the charting programs to detect MACD divergences. And that back tested pretty well. It actually did pretty well. I entered a trading competition and placed second, got a couple silver medals using that software. But my actual trading, wasn't all that. I still wasn't satisfied, and I thought I probably need to do more to understand what I'm doing, more to understand these indicators. So I set up a larger backtesting environment, and one that modeled more accurately the stock market, and it also allowed me to do a baseline with a very simple strategy and compare that strategy to others. And of course the MACD and the MACD histogram were among the first strategies that I back tested, and the results were very interesting to me. In some cases I was vindicated that there were signals of the MACD and the MACD histogram that really weren't that predictive. So as I was clicking along and saying, hey, I don't understand this, the price is not responding, I could see exactly why that was the case, because there are some signals with the MACD that the price just doesn't respond better than to any simple strategy, that it doesn't beat the baseline. However, there are other signals, other parts of the MACD, where it did come up with a pretty darn good track record. The backtesting results came in quite good and certainly worthy of more investigation. So I want to go through all of this information with you. I'll bring all that I've learned about the MACD to bear. Some of this is captured in 4 reports by Backtesting Report, which you can see at the top of your screen. There's also some software that detects the MACD. And in the course of this video series, we're going to have 10 sessions where we talk through not only what's in those reports and what I've learned, but I'll also be sharing with you some backtesting report results that are not in any of these published reports. So you'll get some new information here as well. What we'll go through in this course, it is 10 videos. I want to show you how to make the MACD work for you. So we'll go through what the MACD signals are, how they're used, how they're misused. I'll talk to you about how backtesting helps you choose a strategy. And then we'll go through in depth the backtesting results for MACD. And we'll talk about how to pick the best MACD strategy for you. We'll also talk about when not to rely on MACD. So this is a part where we will go through what worked and what didn't work, and hopefully show you how to avoid some of the mistakes that people and even experts commonly make with the MACD. We'll talk about some critical skills that you need to manage risk while you're trading, and then we'll bring it all together and set up a software environment and show you some examples of trading with the MACD. Now, in this session, we're going to focus just on the MACD signals. I'm going to show you what they are, how they're used, and how they're also misused. And of course, in later sessions, we'll go through more of the data that shows what the performance of each of these signals are. So getting started, this is kind of MACD 101. Tell you an overview, show you the anatomy, what are all the moving parts of the MACD. It is kind of a complicated indicator. And we'll talk through again what the MACD signals are. So as an overview, MACD or MACD, it stands for Moving Average Convergence Divergence. It's a technical indicator, so it's a mathematical abstraction of price. It was invented by Gerald Appel in the 1970s. What it does is it tracks the difference of two moving averages. So a moving average has long been used as a way to smooth out the jumpy nature of the price action. Using two moving averages, when those two moving averages cross, that's one way to get an objective signal to buy or to sell. And that has been used quite a bit in trading and in the literature, and it's pretty well studied. And what the MACD does is it gets a jump or a head start on the moving average crossovers. So it's trying to show you ahead of time that, hey, these two moving averages may be headed for a crossover. So let's get in there early, or let's get out of there early. Let's see what we can do. Let's see what we can do. We'll look at a series of screenshots. These come from TradeStation, and it's plotting price in the green and red candlesticks. And then we're showing on this chart two moving averages. The black moving average is the 12-bar exponential moving average, or EMA, and the brown is the 26-bar exponential moving average. And these are daily charts, so each bar stands for 1 day's worth of price action. Now these two, the 12 and the 26 exponential moving averages, these are the fairly standard settings of the MACD. And we see plotted below the MACD line. This is the MACD line here in blue. It is the difference of the two moving averages up here. So we can see that when the fast moving average is below the slow moving average, the MACD line is below 0. And when the fast moving average is above the slow moving average, the MACD line is above 0. So of course what that means is at the point where the two moving averages cross, the MACD line crosses 0. So these are one and the same signal. We can see this happening here closer to the right edge of the chart. We see that the lines cross down, the fast moving average crosses down through the slower moving average, and this is exactly the same time that the MACD line crosses 0. Now this MACD line, you can plot it as a line like this. You can also fill it in and plot it as a histogram. And this is what Gerald Appel does, so I call this Appel's histogram. And you'll see this, some tools will plot it this way, most will plot it the other more common histogram way, and I'll show you that in a second. Now we'll see it again plotted as a line. Here's the MACD line, and now we see the signal line that is plotted here in purple along with the MACD line. And what the signal line is, it's a 9-period exponential moving average of the MACD itself. So it is a smoother version of the MACD. And from that, we also get a signal when these two cross. When the MACD crosses its own signal line, that is taken as a signal. When it crosses up, that can be a buy signal. When it crosses down, that's said to be a sell signal. So that's another set of signals that you can get from the MACD. Now the MACD histogram, this is the more common histogram, and this is the difference between the MACD and signal lines. Between this blue and the purple line, we're taking the difference and plotting that as this red histogram you see here. So you see that when the MACD line is below its signal line, the histogram is below 0. And when the MACD line is above its signal line, the MACD histogram is above 0. And you can see with these lines on the chart that when the MACD lines cross, the MACD histogram crosses 0. Now the other signal that happens here is when the height of the MACD bar itself changes. So when the MACD histogram is under 0 and the bars are getting longer and longer below 0, that just says that the price is going down and down. And then suddenly here we see a situation where the next bar is shorter. It's actually coming slightly less negative. So that can be taken as the signal. This is called the MACD histogram ticking up. And likewise, it can tick down when it's above 0. The MACD, once a bar is shorter than the preceding bar, we can see a change of character and the MACD is starting to tick down. So it's these changes that are typically taken as a signal, and it's not so interesting to see the MACD histogram continuing to tick up above 0 or continuing to tick down below 0. These are the basic signals on the MACD histogram. There's a lot of them. They happen quite often. As we go through the video course, we'll go through the backtesting results for these signals, and we'll also talk about another class of MACD signals. Before we get to that other class of MACD signals, let's talk about the basic order of events with the MACD signals. We're looking again at a screenshot. This is a different segment, and it's chosen to go through all the motions with the MACD. The very first thing that happens as we're starting out, price is down, and now it's going to start to come up. We wouldn't know that if that was at the right edge of the chart, but our first indication that something might be happening is that the MACD histogram, it ticks up. This bar is shorter than that bar, and so we have something that's ticking in the upward direction. And all that's really saying, it's not very closely related to price, but it's related to these two lines. So it's saying that the MACD line is moving a little bit closer to its signal line. The next thing that happens is we see that the MACD line itself starts moving upward. You can see it by the slope of the MACD line, but you can also see in Appel's histogram, it's probably easier to see that this bar is shorter than that bar. And that corresponds to these two moving averages are no longer moving as far apart as quickly. Now, the next signal that comes in is the signal line and the MACD line cross. And this corresponds to the MACD histogram crossing its 0 line. And again, there's not something real tightly corresponding to price here. This is more activities that are just happening on the MACD. Corresponding to the moving averages, when the moving averages cross, the MACD line itself crosses 0. So we see that as the fourth signal here. And this is kind of the basic order of events of price moving up. And then as price moves up, well, up it goes. And eventually this example is chosen to show you price coming back down a little bit. And the first thing that happens as that process begins is we see signal number 5 here, and we see that this bar of the histogram is shorter than the histogram bar that preceded it. So we see the MACD histogram is ticking down. Well, the next thing that happens is the Appel's histogram ticks down, or we see a change in the slope of the MACD line. Following that, we have the crossover of the MACD and its signal line, and that is sometimes taken as an exit signal. In Gerald Appel's writing, he speaks of a second exit taking the second crossover. There's the second exit, the second crossover. And we have the third exit, and this is probably the well-recognized final exit signal. When the two moving averages cross each other, the MACD line crosses 0. Now we have MACD lines below 0 and the histogram down. And that brings us through the full cycle of the basic MACD signals. All of these signals are in these various backtesting reports that you see shown along the bottom of this slide. Now there's one other class of signals that I'd like to talk about, and that's the MACD divergence. And now it's important to understand that divergence is an overloaded term. That means it's got more than one meaning. The D in MACD is not the divergence you seek. In the moving average convergence divergence, that divergence just means that the MACD line is moving away from its 0 line, and it means that the moving averages are diverging. They're growing further and further apart. And then as the MACD line moves towards its zero line, the moving averages are converging. This can give you some indication, or said to give some indication of increasing and decreasing strength. But all of this with this divergence, that's not the big interesting divergence that you want to know about. The big interesting divergence that you want to know about is divergences between the indicator and price. And on this slide, this is showing a plot of SPY, the spiders. And here again, we have the candlesticks of price. We're way zoomed out on this. So we can see the price with its moving averages. And down below, we can see the MACD. And now this is plotted as Appel's histogram, but we're zoomed out so far that it's scrunched and you can see it almost as a solid. So this is a little bit easier to look at, really. What happens with the divergence is the price comes down and it makes a low. It relaxes, comes back up. It makes another low, and this is actually a lower low coming in October of 2002. But what happens with the MACD indicator itself is it makes a low with the first low, but it does not make a lower low here in October. It makes a higher low. And so that's denoted. I drew in this arrow to kind of show you what's going on. So this is called a positive or a bullish divergence on the MACD. And this is taken as a buy signal. And you can see the backtesting engine here with the MACDL div buy. This is showing where it simulated a trade. It simulated a buy. And then this green line shows a profitable trade. And it was programmed to hang on until it saw the corresponding negative or bearish divergence on the MACD. So here you can see what that is with these red arrows. You can see the price made a high, then it came down, it came up again, and it made an even higher high. But look what happened with the MACD indicator. It made a lower high. So again, this is a divergence between the indicator and price. In this case, it's a negative or a bearish divergence, and it's taken as a sell signal. So as we can zoom in on this, and you can see, I want you to have a chance to see a close-up, and seeing that we're using Appel's histogram to actually trigger this, to note when, we've got the general case that the lines did not make a lower low, even though price made a lower low, but it's actually the uptick in the histogram that gives us the signal to actually buy. That coming in while price is still dropping, it could be dropping quite a bit. So you want to wait till you have an uptick on either whichever histogram you're looking at, and in this case we're using Appel's histogram. So that gives you an overview of the MACD divergences, which is a very important signal, and we will be going in depth in lesson number 3 on how to recognize in various situations with the MACD divergences. Now, for this session, we're coming to an end. I'd like to end with a quiz. This quiz has 2 parts. So the first part is, what did you learn about MACD today? So I'd like you to take a moment and think back through and think about, what does the MACD represent? And I'll give you a hint on that. Think about how it's calculated, and that'll tell you what it represents on the price chart. Now, there's 2 ways you learned about today to draw the MACD histogram. What were they? And the third question is for you to describe the conditions for a positive divergence on the MACD. Now, we'll go through the answers the first thing in the next video. Write them down, make a note, and in the next video you can compare your answers to what we go through in the next video. Now, the second part of the quiz, only you know these answers. I'd like to ask you to think about some things for yourself, about yourself, and think about, what do you expect from the MACD? What are you looking for from it, and what does it take for you to have the confidence to risk funds in the market? So what sort of evidence are you looking for that an indicator is useful, and what kind of performance are you looking for from the indicator? So what kind of expectations do you have? And then I'd also like to ask you to consider whether you're willing to learn what it takes to trade profitably. Consider whether you're willing to invest the time and effort and understand what the various tools of the trade are, understand how to make a trading plan, and then commit to following the plan so that you have a chance of being successful in the market. So there are no right answers to this. I'm only asking you to think it through. I think it'll help your trading. We will go through the answers to the first part of the quiz in the next video. The next video, now that we know what the basic MACD signals are, you'll need to learn how to apply them. And the next step is to learn about the metrics and a method of comparison so that we can understand the track record of these signals. Following that, we'll go through the MACD divergence performance in depth. So that's what's coming up next. I look forward to seeing you on the next video. Thanks. Bye-bye.